Netflix notching its worst week of the year, dropping over 10% since Monday. After a stellar start to the year, the stock is down more than 20% from its recent highs. So what's the next move for the streaming giant? Chartmaster, what do you think?
Yeah, a little bit of a setback. Before we get to the charts, I think it's important to say that this is just a beta trade in many ways. If you think about last year, the Qs dropped 35%, it drops 52%. And now on the way back up, Netflix is underperforming. So goes down more, goes up less. Let's look at a long-term chart. This is an all-data chart. It's very precise lines, and we bounced off that lower band, but the arrow I've drawn is I think we're going to revisit the lower band. Let's go in a little tighter here. That's a 20-year chart. And so if you look at the more here and now chart, what you'll find is we've just come to and now broken to the downside out of that formation. Converging trend lines, you can call it a wedge, you can call it whatever you want, but it's a break the wrong way. Let's just take the bottom line, the same chart, and remove the top. The key is, how much of a break is this? Well, let's go even shorter term, final chart. And what we have here, of course, is, talk about to the penny, it has bounced off that trend line 6 times. And this time, we're now breaching. Does it have to keep going lower? No. Is that my bet? Yes.
And the fundamental picture is clouded now. The commentary from the company throwing some questions about operating margin and also mix shift in terms of the growth being from international, that being a lower average revenue per member business.
Yeah, and I think there were a couple of things that were the tailwind. And obviously on Carter's chart, you saw how everything got so overly pessimistic, bounced from there. But you had the writer strike. That was a tailwind, in my opinion. You have the ad service. That was a tailwind. And then you have the password sharing. That crackdown, that was a tailwind. All of those three seem like they're a little bit long in the tooth, so I agree. I concur with your analysis on the technical side.
Well, yeah, the paid monetization dynamics in 2Q that were just reported, in 3Q were plus 7%. That was weaker than people had expected. So you have seen this slow down. And agree, Netflix tends to be a higher beta to the group in terms of the charts. But to be clear, also, I mean, the excitement for Netflix was not just that. I mean, they were going up on fundamental reasons. And I know you're not suggesting that they weren't. I think you're saying that when the Nasdaq's moving higher, you think it's a good place to be anyway. But they really, that story, I do think, has had a lot of legs behind it. And look, as someone that was long Netflix, I'm out of the stock now. I think I'm going to get it cheaper. It's still what's playing out for Disney and what's playing out across linear TV is an argument why you want to own Netflix. And this is a company that's making money as opposed to these other guys that are figuring out what assets to sell to actually be able to make their next move. So I like it. I don't like it here.
I mean, the theme that seems to be emerging is that Netflix has the great advantage of all these streaming companies.
Without question. First of all, their content is amazing, and they have piles of content where others don't have that content, where others are spending a lot of money. Not that Netflix hasn't spent a lot of money on it, but still, when you stream anything, their interface is the best in the business. It's everything else. It's them. It's Amazon Prime. Everything else I find clunky. It's still theirs in the streaming world, to Tim's point. I just agree that I think that's the chart looks like it's breaking down. If you want to own Netflix for the longer term, which I agree with, you're going to wait and you're going to get a much better price entry.